We've got Mr. Aviral Gupta, who's a fund manager for equity at Indiabulls Mutual Fund, joining us on the show right now. Mr. Gupta, to begin with, this week alone, we've seen something like a 4% run-up in the Indian equity markets. Some weakness today, but would you say broadly the direction is up from here on?
George, I'll break this into three parts. What exactly is going on in the world economy? Right, I'll touch on Europe, US, China, and then India. Right? We have had QEs, we have LTROs, but has anything worked? Has anything really worked? So we really don't know what's going to work over there. There's a lot of froth, right? Now coming to China, China is trying to shift from export-oriented economy to a domestic economy, right? That's not, being a very large economy, that's not going to happen in a day's time, or a year's time, or 2 years' time, or even 5 years' time, right? Coming down to emerging markets, talking about Brazil, the growth rate has come down to 2.1%, right? Now, where does India stand in all this? We are at a very great advantage right now compared to other economies. That's the kind of view which I am taking in. Now, how do we take advantage? If government comes up with some form of reform, some policies, like some announcements were made in infrastructure last, 2 or 3 days back, they were welcomed by the investors very highly, right? That was one of the reasons why the markets really moved up, right? But we expect more in a sense that there's a lot of difference between announcement, implementation, and completion. So if those modalities can be cleared up, I think investor community will really welcome them.
So what is the portfolio approach that you're adopting, and do you think that someone who's sitting on cash should now start putting their money into the markets? Are these attractive or compelling valuations according to you?
Valuations are very compelling at this point of time, no doubt about it, but I would say you might get the stocks much cheaper from here, from these levels. Let the June 17 elections get over. Let's see how Greece pans out, and that will be the key deciding factor. Second thing is, I don't think, fine, the markets in the globally they have run up, but I don't think they're going to receive that much of. There won't be that much of upside this time in case QE3 or QE3 is announced, right? All those things they've completely failed. So why would I trust another QE?
Sure. So, but Aviral, June 17th, I think everyone's agreed that you will have a fractured mandate come out of Greece, that there will be some development in Greece, even if they don't leave the euro. By the end of July, Spain is going to default in some manner or the other because it's got to bail out its territories. It will have to seek an international bailout. Now, given these two significant developments, do you believe then that the markets, or rather central banks, will have to push ahead with some form of QE, and that in turn can drive up equities and EMs irrespective of what's happening in Europe?
That will definitely drive the equities and the EMs, but I think that run will be a very short-term run. That's what I feel. If we want our markets to be sustainably on a bullish mode, the government has to come out with certain reforms. That will be the key. Because one, as I said earlier, all the actions which have been taken in the past, they have failed completely. So what else can they bring now? What all tools are left there? That's a very big question mark.
So Aviral, let's break it down. Now, if we look stock specifically or sector specific, which sectors would you start nibbling into, which look attractive?
One is something like this, that we are still very bullish on rural consumption story. Simply because one very simple premise that elections are due in next 2 years. They may happen earlier also. In that case, rural economy will be again flush with money. They'll push in the money to the rural economy. So that's one sector which I'm looking into. Second thing is some defenses like pharma is something which I'm looking into. Given the account, especially in view of rupee depreciation. IT, I'm very stock specific. I cannot name the stocks specifically because of regulations, but a lot of bellwethers have been completely disappointed. So it's going to be very stock specific in the rest of the sectors.
How about the infrastructure sector? Are you positive on that, given some noise that came out of Delhi just 2 days back?
Exactly, that's what I said. Announcement, implementation, and completion. There has to be more clarity on that.
Okay, so for the markets, you're basically saying that one should sit on the sidelines, wait for the dust to settle, and then perhaps enter. What levels do you think one should look at?
Levels will be, the current valuation levels are pretty comfortable at this point of time, right? But you can start nibbling in. That's something one you can do. You can start nibbling in. But I feel the downside risk is high, even now, because of the global events, not because of the India-specific events. One. Second thing is, George, if you look at the day in budget, GAR was announced, the rupee level then and rupee level now, right? And see the depreciation which has happened because of that. Now the clarity was supposed to come on May 31st. It hasn't come in. It has been postponed to monsoon session. I believe once that clarity comes in, the inflows may still be back. Even now, the FIs have not pulled out the money the way they should have. They've pulled out the money from other economies.
All right, Aviral, thanks very much for taking the time out and giving us that view on the fundamentals of the Indian economy as well as the key levels and sectors that you are closely watching out for.